Hello and welcome to Strategic Business Leader Topic Explainer video on the topic of risk strategy and identification. My name is Ashim Kumar. I'm an expert SBL tutor for the ACCA. Now, as I've already said, we're going to talk about risk strategy and identification, and the important thing is that this is a regular topic in the SBL examination. So you really need to understand its context in the syllabus as a whole, how it may be examined, and what other topic areas are related to this that you could bring into your answer. And of course, we'll be talking about all of those as we go through this video. So let's start with what risk is. Well, risk is much more than a theoretical concept. In fact, Michael Porter says that it is closely connected to the success of a strategy as a whole. In other words, if you don't get your risk management right, your strategy, your whole organizational strategy will not perform as it's supposed to. Okay, so it's fundamental to strategic management. Now, there is a definition of risk. That definition is a variability of outcome. Okay, so that's how much a particular outcome can change. If it can change a lot from a particular scenario or situation, then it's called high risk, and vice versa. As we've already said, it can derail the success of our strategy, the alignment of our strategy, and all the operational activity. We'll be talking about that in the next point. Every activity in the value chain, you remember the value chain, will be affected by a poor understanding of and response to risk, thereby undermining the success of our strategy. What does that mean? Well, for example, if we don't evaluate in our inbound logistics, let's say, the quality of the buyers that we, of the sellers that we have of raw materials that we buy, then there's a risk that that quality is going to be below par. It's going to result in high levels of wastage in our operations, or it's going to result in high levels of returns from our customers, all of which will have strategic impacts. All right, and so we need to monitor that risk. We need to monitor the quality of our raw materials, the raw materials that we buy, and also the quality of the people or organizations that sell those to us. Okay, and we need to assess whether or not there's a risk associated with either of those. Is there a risk, for example, that this seller is going to go out of business, in which case that's a big problem? Is there a risk that this seller does not implement high quality standards? Well, if there is such a risk, then that too is a problem, and so on. Now, we can apply that kind of thinking to every aspect of the value chain. Now, risk is something that even the largest global companies in the world sometimes have a problem with, and this leads to an enormous financial and reputational cost. Citibank, Facebook, Wells Fargo Bank, various others have actually fallen prey to bad risk management, and it has cost them a lot of money. There's an article here. It's called 9 Common Risk Management Failures and How to Avoid Them, from a publication called Tech Target, and I would suggest that you have a look at that article. Another company that has committed some major errors in the risk management process is ConocoPhillips, of course, the huge oil company. And as you see from that picture there on the side of the slide, what happens is that there's an enormous outflow of cash as a result of that behavior. Okay, so we know what risk is. How many types of risks are there? And how do we do this management that I keep talking about? Well, let's start with the first question first. As you see in this diagram here, there are all kinds of risks that an organization faces, from health and safety risks to political risks, so change in government, for example, risks in regulatory issues, so for example, if the regulations change, or if we don't meet the regulation that we're expected to meet in our industry. So as accountants, as professionals, if we're running an audit firm, then there are regulations that apply to the way in which we run that firm. And so we're constantly obliged to ensure that we don't breach any of those regulations. We don't want to risk that from happening. And so what we do is we put controls in place to make sure it doesn't happen. Other risks, well, there are risks associated with projects and change management. Yeah, what happens if the price of the raw materials that you need to implement a particular project increases by 20%? Well, the profitability of that project may completely be lost. And so we would need to assess, well, the likelihood of the risk of that happening and so on. Okay, so I think you get the point. There are lots and lots of risks that organizations need to identify and then address in terms of saying, how important are they? How dangerous are they? How likely are they to actually happen? And for those risks, determine what we're going to do about them, or rather what the organization is going to do about them. Now, as we've already seen, there's an enormous range of risks. And how do we identify them? Well, there are a number of techniques that we can use. Each organization will have its own, but these are very commonly used. So brainstorming, and I'm sure most of you will have come across what that means, where basically you get around a table and everyone throws ideas into the pot, and they're discussed, they're challenged, they're added to, and so on, and eventually you come up with a list of risks which you can then prioritize and then decide what to do about them. Another way of identifying risks is by talking to your stakeholders. Speak to your sellers, for example, the people that you buy your raw materials from, to assess the risk that they might go out of business. Speak to your customers. Find out what it is that they are afraid might happen with your product or service and address those. Look at your project plans. So you will have probably by now covered the area of project management in SBL. So a project plan will embed in it various risk estimates. Okay, root cause analysis is another one. It's a technical term. Basically, it's saying, well, this is the outcome. What is the root cause of this happening? So is it, for example, that the reduction in quality, which is the outcome, the cause of that is that we haven't trained our people sufficiently well. Okay, so that's another way of identifying what the risk is. So if we don't train our people sufficiently well, then there's a risk that we're going to impact on the quality of our output. A SWOT analysis, something you will have come across many times, I'm sure, in your lives. Strengths, weaknesses, opportunities, and threats. When you determine your weaknesses, when you determine your threats, embedded in that process is also an assessment of how risky those threats and weaknesses are. Now, before we move on to the next slide, just want to make clear that you will not be expected to explain each of these in the examination. Okay? In the examination, you may choose to say, well, the first stage would be to identify the various risks. As there is such an enormous range of possible risks, you might go through one or two of those: regulatory, social, financial, reputational, what have you. As there is such an enormous range of risks that we face as an organization, there are a number of techniques that we can use to identify them and then prioritize them before deciding on how to address them. Techniques for identifying those risks could include, and just name one or two, brainstorming and SWOT if you like, okay? But do not, please, in the examination, waste time explaining what each of them means. So once we've identified what the risks are, how do we manage them? Well, first thing is evaluate the threat, right? How likely is it that the risk is actually going to happen? And what is the likely outcome if it does happen? Okay, so clearly if something is highly likely to happen and the outcome of that is going to be very bad indeed, then that is something that we need to address first of all. Okay, so we can use these criteria to start to prioritize how we're going to deal with the risks. Decide which risks we're prepared to take. So this is related to risk appetite. Now, risk appetite, again, you should know this, is the level of risk that the company's stakeholders, the organization's stakeholders have made clear they are prepared to accept. Okay, so some stakeholders will be high risk and some will be low risk stakeholders. In other words, they'll have a high risk appetite, others will have the opposite. Now, if they have a high risk appetite, then they may be willing to take on risks where the likelihood of it happening is medium, but the outcome might be very, very high. In other words, a positive outcome. And so you say, well, it's worth taking a medium risk to get such a positive outcome. On the other hand, if the stakeholders are risk averse, in other words, they don't like risk, they might do the opposite. So they say, no, the medium risk of it happening is way too risky for us. We're going to reject this. We're not going to take that risk. Okay? There are frameworks as well for managing risk. COSO's Enterprise Risk Management System, ERM model, is one framework for managing risk. Another one is the TARA framework. Now, you don't actually need to know the details of the COSO ERM. Okay, you will never, as with all other subjects or all other frameworks and models in SBL, you will never be required to explain them. However, an awareness that it exists will add value to the quality of your answer. All right, now, same thing with TARA. Okay, so you can say in the examination, okay, well, prioritizing these risks by their likelihood and outcome, I would suggest risk number one, we really must transfer, because bearing in mind the risk appetite of our stakeholders, it is simply not worth taking. So we'll pass it on to somebody else. Now, the thing is that risks vary, risks change, okay? And as they change, then the way that we assess those risks will also change. Some risks will become greater, other risks will diminish. And so we need to constantly monitor and adjust our plan about how to deal with them. If a risk which was not particularly great is something that we were prepared to accept when we first did our plan, suddenly becomes much greater, we might choose to transfer it. We're not prepared to accept it any longer. Once we've done all of that, we then need to invest in mitigating the risk. And by that I mean the ones that we have decided to keep, the ones that we have decided to reduce, the ones that we have decided to accept, we want to minimize the risk or the outcome of those risks as much as possible. And that's where we implement our internal controls. And here we see our first connection. Actually, it's our second connection to other topics in the syllabus. The first connection was with between risk and strategy. The second connection is between risk and internal controls. Okay, so internal controls are implemented in order to mitigate risk. Other things, part of our internal controls, we need to inform and educate the board and employees of the risks and what our policies are. And we need to train the board and employees on how to behave to mitigate the risks. We need to embed the risk into culture. In other words, the way that we behave as an organization towards mitigation of risk should be the normal way that we behave. In other words, it's not something that we need to remember. It is something that is done automatically. So, for example, if there is somebody gets injured at work, then it is automatic for us to record that injury in the health and safety documentation and to then trigger some way of mitigating that risk further to make sure that nobody else gets injured. Okay, so that should become part of the normal way of behavior in the organization. That's what I mean by embedding risk into the culture. And then overall, again, as risks evolve, okay, some will go away altogether, new risks will come along, our management of risks will evolve as well. And so, again, this is something that the internal audit function will usually be responsible for, and they will usually report to the audit committee. Now, here we go, audit committee, and we're talking about corporate governance. So we see a link between risk and corporate governance. Okay, so now that we've done all of that, this is how we need to approach the topic so that we understand the context, which is what I said right at the beginning of this video. We need to understand why we need to do risk management. Why is it important? And we said the reason it's important is, well, our strategy could go completely off track if we don't do it properly. Our stakeholders won't like us very much if we don't do it properly. How do we prioritize risk? Well, we said that we look at the likelihood of its outcome and the actual outcome itself. How bad or good is that outcome? How likely is it that this risk will actually materialize? How does this relate to the organization's stakeholders' risk appetite and so on? We need to understand, when we know what the risks are, we need to make some kind of judgment about whether the risks have been sufficiently mitigated. Okay, the ones that it has identified, or even if there have been risks which the organization hasn't identified that you have seen. Okay, so these are risks that may be in the case study, in the pre-seen case study. There may be risks given to you in one of the exhibits, which are not included in the task itself, in the question itself, or the risk analysis that the organization has provided. And so you might say, well, oh, hang on a second, this risk also needs to be included. Okay, so that's the way you need to be thinking about this topic. So let's just summarize those areas. Syllabus topics related to risk, strategy we've already spoken about, stakeholder management. So when we talk about, for example, risk appetite, okay, and also to assess risk, those are part of our stakeholder management activities. Internal controls, we talked about those, mitigating risk. Corporate governance, we talked about those. All right, well, about that when we talked about the audit committee. And finally, culture. This needs to be part of the organizational culture if our mitigation is going to be effective. In addition, in the Study Hub, you have access to the ACCA study materials. So they cover, this is a combination of a workbook plus quizzes and tests and all sorts of notes and revision notes that you can use to help you with your studying and your revision. Okay, so again, that's at the Study Hub, on the Study Hub, and that's available to you free of charge. Wonderful resource. Okay, so how is the topic examined typically? Well, so far I've seen it examined in two ways. The first was by far the most common, where the risks have been identified, all right, by the organization. They're included in one of the exhibits, along with the mitigation activities for each of those risks. And the question says, tell us whether the mitigation is good enough to control that level of risk, and if not, suggest something else. Another way it might be examined, and as I say, this is far less common, identify the risks associated with the plan, and then identify their impact and suggest mitigation. Okay, so for example, there was a past exam paper where a company was thinking of moving its premises to an area which was vulnerable to flooding. All right, and people didn't want to particularly move. And one of the things that you had to talk about there was, well, how big a risk, or certainly address, how big a risk was it, what are the dangers associated with it, and how could we mitigate it to an extent that would prevent our employees from being scared of moving there. Okay, so typically those are the ways that have been examined, but you never know, the examiner might give us something different. Doesn't matter, because if we understand the fundamentals of risk, we can turn that knowledge to anything that we are asked. Let's have a look at a couple of past exam tasks to give you a feel of what the examiner often requires from us. The first one is this one. It's task 2 in a past exam paper. We're just going to look at the tasks itself, or the tasks themselves, and get an idea of how they're asked. Okay, so secondly, the CFO has received an email from the risk manager outlining the latest review of Courgette's principal risks. He's asked the CFO for his input into the assessment of these risks before they are presented to the chair of the audit committee. CFO has asked for your assistance. Draft an email response which the CFO can send to the risk manager, which, number 1, discusses the dynamic nature of Courgette's principal risks. So clearly in one of the exhibits, you will have been given the principal risks, what they are, and you are expected to determine or to discuss that they're dynamic, why they're dynamic, and what needs to be done to make sure that we continue to mitigate against those risks despite their dynamic behavior. In other words, we need to monitor them, we need to continually update our internal controls and so on. That's what the examiner was looking for there. In the second part, assesses the potential consequences of each of these risks for Courgette's. Now here, it's very easy to say, well, the potential consequences are that we're going to lose money, it's going to affect our reputation, and that's it. And I suppose you could say that for every possible risk that materializes. But that clearly wouldn't be enough, otherwise we wouldn't be getting 10 marks if that's all we had to say for each of the risks. What the examiner wanted here was, okay, so this risk materializes, or if it does materialize, what does it tell us? What are the consequences in terms of our customers, our stakeholders, all right? And how well have we managed to mitigate against those consequences? Because if we don't improve those mitigation techniques, or measures, then the consequences could be enormous, or the consequences are bearable. Okay, something like that. So you need to have a story. Simply saying it's going to be expensive and it's going to spoil our reputation is nowhere near enough. Professional skills marks are available for demonstrating evaluation skills and using professional judgment in assessing the dynamic nature and consequences of principal risks highlighted by the risk manager. Now that's interesting, right? So evaluation skills and judgment, professional judgment. both critical. There's no answer to this in some textbook here. As a professional, you are expected to demonstrate judgment. You're expected to understand risks. You're expected to understand the context of this organization. And based on that, you then need to craft a story, craft an answer. Okay? The examiner's comments on this particular, especially B part 2, was precisely what I said earlier, which was, he said, well, all the students kept repeating was, well, they're going to lose money and it's going to damage their reputation. Well, both true, but not good enough for 10 marks. Here, in a separate question, the task requires us to prepare a report for the Chief Executive, which evaluates the assessment made of each risk and its potential impact. So again, we have an assessment of the risk, we have an assessment of the impacts, and we need to say, well, have we assessed those risks and impacts correctly, or is there something we're missing? Evaluates the adequacy of the risk mitigating activities for each risk. How good do we think the risk mitigation is or has been? And if it hasn't been particularly good, can you recommend what we should be doing? Either improving the existing ones or perhaps replacing the existing mitigating activities. All right, so here we see how it has been examined. And, it's quite a common, if this topic comes up, it's quite a common way of examining it. How well have we mitigated our risks? Have we identified all the risks? Have we correctly prioritized them and so on? Okay. One last thing I want to say, and that is that we may choose in an answer which is not directly about risk. So, for example, in a project management answer, to say that one of the things that we would do in a project plan is for each of the critical areas in the project, we would embed a risk assessment. So here, although the question is about project management, you would bring in risk. Now that would impress the marker. Okay? Because you are showing your understanding of the integrated nature of the SBL syllabus. Okay. Well, that brings us to the end of this particular video. I hope that you have found it useful. And I encourage you again to have a look at the SBL Study Hub for additional materials.